As the December 15th deadline nears for new tariffs or a phase one deal with China, some investors are looking for new ways to put their money to work in the emerging markets. Our next guest has a unique way of doing just that with an index fund that contains no investments in China. Perth Tolle is the founder of Life and Liberty Indexes, which offers the Freedom 100 Emerging Markets ETF. Now, it launched in June. It's not doing too badly. It's up about 4.5%. Perth, thanks so much for being here. We appreciate it. Me. So now your fund has no exposure to China, to Russia, or to Saudi Arabia. Why is that?
Yeah, so that's unusual for an emerging markets fund, I understand. But most emerging markets funds are market capitalization weighted, which means the highest, the largest weight goes to the biggest market. So China typically has about 30 to 35% in most emerging markets funds that you see from MSCI or FTSE indexes that the funds are based on. Our fund is freedom weighted, so it's based on the Life and Liberty Freedom 100 Emerging Markets Index. And what that means is the higher freedom countries in the emerging markets get a higher weight, the lower freedom countries get a lower weight, and the worst human rights offenders are excluded from the index. So naturally, the worst offenders like China, Russia, Egypt, Saudi Arabia are currently excluded from the index.
Do you risk missing out on opportunities because it's not involved with China?
We've gotten that question a lot more in the past, whereas now people are trying to actually avoid that excessive China exposure that you see in some of these other emerging markets options. We do believe that freer countries do tend to grow more sustainably, recover faster from drawdowns, and use their human and economic capital more efficiently. And so in the long run, we do not believe we're losing out on alpha, but this does track the MSCI emerging markets very well. We don't believe in excluding any particular country arbitrarily, so we don't want to exclude China arbitrarily. It's just not included right now because of its freedom levels. When it becomes more free, we do hope that it will be.
So that can change.
Yes, absolutely.
What are some of the stocks that you're holding underlying the index?
So the biggest stocks that we have in the index right now are TSMC and Samsung. And that's because we have a high weighting in Taiwan and South Korea. And because of those high weightings in Taiwan and South Korea, that's how we have such good correlation to the other emerging markets indexes that have a lot to do with China. So a lot of emerging markets, most of them do trade with China or invest in China. And we don't penalize that. We don't penalize them for that free trade that they conduct with China. So we do get a lot of indirect exposure to China, but we just have no direct exposure.